Doug have done as far as reinventing commendable, great for results. So thanks to them for innovating in this area. The head you see on my presentation, we go from one metal, which is having a great time with the price side of the equation, to one where uranium has obviously been struggling. And I have put in there developing high margin uranium and modifying to survive with gold, lithium and soda ash. I think one of the positive things, if there is any from a Trump victory at the election in the last few days, is that there's plenty of people who don't involve science when they talk about energy and power, and they talk about emotion and those sorts of silly things. And I think at least maybe a Trump victory will start to change the conversations that can be had around all sorts of issues with respect to nuclear power. We've seen South Australia blow itself up with a renewable experiment. Victoria blithely cuts its generating capacity by 25% in a swipe without thinking of the consequences. And here we are sitting with this ridiculously low uranium price. I think nuclear needs to be put on everybody's conversation across the world, including Australia, which still we don't have, and I would love to see that happen at one stage. But whilst we do have this low commodity price, we're going to work as hard as we can to keep the company going. So next slide, please. So just in summary, Aura has a pair of projects in Sweden and Mauritania. The uranium market, for my liking, is still a 2-year play, and a 2 to 3 year play for us works well, as we expect Tiris to be in production probably in the 2 to 3 year time frame. I think that the current uranium price at the spot market is frankly an irrelevance. I think it's an unregulated market and a very played market, and you've got to look to the term market to see what's really going on. So it's a bad advertisement for the uranium sector, but when you look forward, we still see nothing but a strong opportunity for a very profitable sector some few years down the path. During the year, we had a really great and successful listing on the AIM market. It's not for everyone, it's expensive, it's very, very difficult to do, but with the project 2 or 3 hours flight north of London, with a project 4 or 5 hours south of London, it's a much more relevant market for us. And, you know, we can see the day one day when we have 2 operations up and running that we don't need to be in Australia anymore. That's how relevant I think the AIM listing was. We raised $5 million. It's given us enough money to kick off the feasibility study again with Tiris, and we hope to have that finished by the end of 2017. But also spend a bit of money on some of these other minerals that we picked up around the middle of the year. Some great gold tenements, a bit of soda ash, which we need in our uranium project in Tiris, and also maybe that's got a lithium credit as well. Next slide, please. I like this slide broadly because of the 2 boxes on the right-hand side, the yellow and the red. Essentially what it says is 500 reactors built and under construction currently, and that over the next 15 odd years, we're looking for another 500 to come on stream. So I'm not going to bang on about the demand story. There's plenty of experts in the speaker list today who will do that, but I just leave it as simply as that. On a 2 to 3 year basis, nobody argues that uranium is going to be an excellent place to be, and so people have to survive and stay because we know that our project's going to be worth a lot of money in that time frame. Next slide, please. I go to this Cameco chart. I refer to this quite often, and I'm surprised a lot of people don't understand it when they see it. If you go to 2004, you can see the blue bar in the histogram there represents the amount of long-term contracting at that point. As you can see, that's of the order of 60 or 70 million pounds was done in long-term contracting that year. In 1 year, it jumped to the 250 million pound level. If we saw that in any other commodity, we know exactly what would occur. It's quite an extraordinary change in a very short period of time. And then it was sustained at that level, 200 million odd pounds of long-term contracting, all the way up to 2012. Fukushima occurs, and of course the levels fall. I haven't had an updated chart from 2015, but it was up slightly, not a hell of a lot. So we still sit there with this point, and the people I talk to in the market say that when the utilities do decide that they are exposed enough and uncovered enough in those long-term positions, they will all try and charge through the door, as they did in 2004, and you can see the consequent increase in the uranium price. Next slide, please. So on our projects, we have the Tiris project in Mauritania, as I mentioned. It has low cash costs, a good inferred and indicator resource, and a low capital cost for development. The reason why we're focusing on that one clearly is it's an easier project to fund for a company our size at the moment, and we can get it into production reasonably quickly. Hagen, for me, is a 5 to 10 year proposition of a project, longer term, but equally, much more, I should say, and potently profitable and valuable to the company. It's just going to take a longer path to get there. Europe's critically short of uranium, in its own right, and this has been pointed out by groups like Euratom, who control and regulate the nuclear reactor industry in Europe. Berkeley's got the resource, we've got the resource, there's very little else there. And you've got the issues around Kazakhstan and Russia and China's requirements for some of that Kazakh uranium. So strategically, over a long period of time, we think Hagen is an excellent project to be involved with. Next slide, please. You can see here, again, I've talked about the irrelevance of the $18.75 a pound uranium. And you can see the line up there. We use $65 uranium to do our scoping studies. If we did it at 55 or 60, we'd still get a great result. And our project still under the term price will make money at the current price. So I think that's a strong project picture to look at for us in the future of what we can achieve. Next slide. This is the Tiris uranium project. We finished the scoping study in August 2014. Has an initial production of 1 million pounds per annum. If we can utilise 40 or 50 million pounds of that inferred resource, clearly that's too long a project life, and we will look to expand that into operation. But just on that project, it's a $45 million capital and that $30 a pound cash cost. The key benefits we have in this project, it's very shallow. It's a superficial deposit, 5 metres maximum depth, and we have this great ore upgrade. We have very fine carnotite mineral involved in uranium, and we simply do a trommel wash and a screen, and the majority of the oversize is waste and the undersize goes into the leach plant. We get great recoveries in a very short period of time, so the resulting project for us, and we are in the Sahara Desert, is a very small physical footprint, no grinding, which saves the concrete puttings, the diesel generation, the diesel supply, and it's quite a scalable, modular type facility. Next slide. This just explains a little bit around the simple ore upgrade I talked about. You can see the yellow being the uranium and the gravel being the coarse weathered granite. If we trommel that and wash it, get a slurry, put it over a 75 micron screen, we essentially get the split we're talking about there. The oversize will go straight back into the pits and the trenches and the flat-lying mine areas we've done, and the undersize will go into the processing plant. So you can see from putting 120 tonnes in an hour, which the scoping study envisaged, we're only processing 25 tonnes an hour to get that 1 million tonnes per annum production. So it's very simple, it's very straightforward. Clearly the fine carnotite presents other challenges, and we've got to manage in our process and are mining that, but it's a great benefit to us. Dumb geological luck, as I say to our geos, and they don't enjoy that comment. Next slide, the Tiris uranium deposits and the location. You can see we have the Hippolyte Sardi and Lazar projects in close proximity, and then there's, of the 76 million tonnes of ore, about 16 is over at the Kirk deposit. This is we've done 8 campaigns and 8 trips out into this area, and it's never presented any problems to us whatsoever. I did it in February last year, and we drove 1,800 kilometres from Zurat down on the bottom left-hand side of the image there, up into Hippolyte, and we didn't see a car. So there's a lot of good people helping us in that area. and we find Mauritania a really great country to work in. The next slide shows you exactly the sort of environment we're in. It's the Sahara Desert, as I said. You can see we don't have many trees and animals to contend with in the background there. And we've got carnotite, very shallow in that trench there where the arrow is pointing. So the permitting must be done correctly. The environmental studies are still required, but we don't believe they're going to present too many challenges for us. Next slide. Just very briefly, when you look at Mauritania as a destination, I was there 3 or 4 weeks ago at the Mauritanides conference. We had the President, the Prime Minister and the Mines Minister at our booth for 7 minutes, which I think we got the record for the conference. And they are very, very supportive in what we are trying to do, and in fact what all the companies are trying to do. There is a real critical mass of oil and gas companies, of resource companies that have been there for some time, and this is building a very solid base. We find the mines departments, the minister in particular at the moment, he's newly appointed in the last 6 months, a very sophisticated, French-educated, perfectly English-speaking gentleman to work with. So, yeah, they couldn't be more helpful from our point of view. Next slide. The Tiris scoping study, just to show a couple of key points there, released July 2014, as I said. We got these quite fabulous financial outcomes using that uranium price, but the important point to note there is that of the £50 million, we only used 20% of that to get the study completed, and so that's only 10.8 of the 50. So there's plenty of upside in this project and the financials as we get it into production, and the contemplation to increase this over time to a £3 million per annum operation is live, and we will continue to look at that. And we get, obviously, much better financial outcomes at that level and a more respectable mine life than the 50 we've got at the moment before that resource was put through the mill. Next slide. The development strategy is pretty simple. You can imagine with $45 million capital spend and quite a small footprint, we believe this project can be put in production quite quickly. We have recommenced with our new funds the feasibility study, and we hope to have that complete by the end of 2017. And if everything goes in the perfect straight line, and unfortunately we know in the resources industry that doesn't always happen, and this is a perfect world scenario, but if everything goes that way, we could be in production in late 2018, early 2019. So a 2 to 3 year horizon, which I believe could be the perfect time horizon to match a recovery in the uranium price. Just other key points on Tiris. As I said, the study has recommenced, the funding has been dedicated towards that, the majority of it, and that study will be complete quite soon. We've also signed some time ago now, we signed a strategic development MOU with GPEC, which is a Guangdong-based engineering company. They've done all of Guangdong nuclear power plants, a lot of hydro, a lot of coal-fired power stations, and they would like to get more into this area, so we've been talking to them over some months about how they could help us largely with an equipment purchase, EPCM style of contract. And we visited them, very interesting people, very focused on broadening their base out of the sort of the downstream area of power. Next slide. A part of my heading was surviving where we are, and we, in the uranium sector, we're going to go down a little bit with this uranium price, but we're not going to go down without swinging. So we found that there were some excellent tenements available, 45 kilometres really of prime greenstone belt south of Tasiast, which is a 20-odd million ounce deposit in Mauritania. Kinross paid $7 billion for that some years ago. I'm sure they don't believe it's worth that now, but it's a good headline for us to talk about. And already these tenements, using our people who are under another company management at the time, about $3 million has been spent on this ground. We were able to buy it, as you can see there, for quite an inexpensive sum, and it's been, the initial assessments and reassessments again for us are very positive. If you go over the page, sorry, I should say, if you go to the next slide, Tasiast South Gold versus All Gold slide, slide 16. You can see the tenements on the eastern side are south of All Gold's. All Gold's a TSX listed company. It's gone up 400 or 500% in the last 4 to 5 months, and they've started a drilling program. They've been getting quite unbelievable results. I think, as you say, in the sector, I think they've cracked a geological code there. They started to understand they've got these a series of on echelon, different grading quartz veins, and we believe they very likely run straight through our tenements there. This is very unexplored, these tenements, from our point of view. I think we've done one RC drill hole to 100 metres every 20 square kilometres. We've got a lot more work to do. We plan to start that in the coming months, and it's definitely given us another leg to see through this period where the uranium price is flat. It doesn't lighten our commitment to getting Tiris into production as soon as possible, but it just helps us to continue to build what we believe can be a multi-commodity company down the path, and to continue to show some sort of pluck for the market to want to buy our shares. Next slide. Also, when we were doing the review of the technical parts of the project for the AIM listing, the consultant we used has done a lot of work in SABCAs, they call them, salt pans through Africa, driving between the Hippolyte deposit and Kirk. He noticed a couple of SABCAs. They did some quick review, and so we've now pegged those. So we believe that with our need for soda ash to leach the Tiris ore, that this could be a very good positive for us over time. And they are often known, obviously, for having lithium byproducts as well. So we will be sampling that hopefully before the year end and seeing what results we get there. If we can get a soda ash source there, we've got to get 16,000 tonnes of soda ash in there each year. If we get a soda ash source locally, it could probably save us as much as 25% on our costs. So we're looking at that quite closely. Hagen, next slide. The Hagen project in Sweden. As I said, very strategic European Union project. I think what Berkeley have been doing is fantastic, and they are really leading the way in Europe, and we're going to follow their footsteps. We've got a large resource there. It's got significant base metal credits as well, and that's really what drives these very low cash costs of $13.50 a pound. A large capex, so not for us to develop obviously at the moment, but with cash flow from Tiris, with the recovered uranium price, that's why I call it a 5 to 10 year project. It's got a very, very large NPV, so we'll keep on working that hard. We're just starting at the moment a community engagement program, and we expect to have that underway before year end to get the coalescence of all the attitudes of people in the local region and to get that pushed down towards the Swedish capital. Next slide, please. You can see the project. It's central Sweden. The project, very consistent geology, flat lying, 0 to 150 metres, sees the majority of the resource, and in a farming community which is desperate for employment and jobs. Next slide, please. We've done a lot of test work from bench scale testing. Really, the crux of the project is the leaching test work at the moment, and we've done bench scale testing, half-metre columns and 2-metre columns with consistent and high recoveries. And we think the next stage is to do a larger series of columns and to do what we call a crib test, which is the box you can see there, which is the height of the heap, 2 metres by 2 metres, done in the local temperature, with the local water, with the locals themselves looking at it to realise that it doesn't have 2 heads and is not a monster. That's about the summary for me. You can see recently we've had this nice rise up with market cap and share price with the AIM listing. We really do believe we've found a much more relevant market for our shares, and we've found a market that is willing to look at funding us in the future. Aura is going to keep on pushing its uranium strongly. We believe that uranium is an excellent commodity coming for the next two to 3 years. It's confused and it's stumbled and it's got a stumped toe as we speak, but it will recover. And in the interim, to continue utilising all the skills we have, we've got the goal of the lithium and the soda ash to push everything along. So that's all I have to say at the moment. Thanks very much for your time, and thanks for taking this presentation on Skype. I wouldn't normally have done it, but thank you.
Thank you very much.